Good morning, everyone. You are watching live Daily Market Outlook for Friday, 15th of March 2013, prepared by Windsor Brokers. The main characteristics of the previous two sessions, talking about the US and the Asian session, are that dollar is taking break after recent strong gains, giving some room for the opposite majors to recover. As euro surged above 130 and holds steady so far, while the top performer was sterling, as it surged against greenback to the levels above 151.43 seen so far. Similar is with the British yen that hit levels the highest so far at 145.42, and now seeing a more prospect for some stronger recovery. Dollar yen remains steady around 96, still unable to clear the upper barrier at 96.70, although the overall bullish tone is still firmly in play and still keeps the focus on the upside, as the investors are awaiting approval of the new Bank of England, Bank of Japan chief. The Parliament approved the Prime Minister's Shinzo Abe's nominee for central bank governor, Mr. Haruhiko Kuroda, and the nominees for the two deputy governors' post, now clearing the way for the radical monetary easing Abe has long pressed for. The yen said it's still steady at dollar yen is still steady around 96, and most likely now, after the confirmation of appointment of a new governor of central bank, investors may take the fresh action. Commodities are still supported in a way, as crude oil holds about just under recent highs at 93.35, while gold lost some ground yesterday after repeated attempt at 1600, triggered the dip that spiked yesterday to 1576 approximately, but a quick recovery now sees again more focus towards the upside. It's still entrenched within the 1576 now upper boundaries 1594 range. We need to see the break above 1600 in order to confirm the recovery and the open way for a fresh extension of the larger recovery from 1554. EU finance ministers are meeting today, and the top subject is going to be the Cyprus deal. They are planning to work on a rescue package for Cyprus. During all night, they were working in Brussels with the aim of presenting the outline of a bailout program to Eurozone finance experts on this morning. The package is expected to contain a mixture of tax increases, one of revenue-raising measures, plans for privatization, and the overhaul of Cyprus banking sector to ensure that funding for the bailout is sustainable. It is possible Russia will help finance the program by extending a €2.5 billion loan already made to Cyprus, and potentially reducing the interest rates according to the sources that announced this news. The currency area's finance ministers, joined by International Monetary Fund Chief Christine Lagarde, will meet in Brussels later today. But even if they agree a plan, it will not be definitive. Comments from Cypriot Finance Minister Mihalis Saris, who will travel to the Finance Minister will travel to Moscow for meeting on Monday, and raising the possibility that an agreement on the participation can be struck with the Russians. Then recall the Cyprus is looking for a reduction for extension of the payment of €2.5 billion loan that is is due in 2016, and also reduction of the interest rate that was originally set at 4.5%. They are looking for some levels around 2.5 to 3% reduction from 4.5%. From today's economic indicators, calendar set economic summit and Eurogroup meetings due today. Swiss PPI came slightly better than the previous release at -0.1. The 0.1 is February's release compared to 0.3 forecast. Coming at 10 o'clock GMT, inflation for February from Eurozone. No changes expected on the core and the year-on-year CPI, 1.8 and 1.3% forecast, equal to the previous releases. UK's leading index for February is coming at 10 o'clock GMT, 0.1%. Previous release we have the forecast, and then comment the speech of MPC member Dale that is due at 11 o'clock GMT. Data from United States again 1 hour earlier at 12:30 GMT. Empire State Manufacturing Index for March 9.8 forecast versus 10 previous release. February inflation 0.6 seen in February compared to 0%. No change in the month of January. Core CPI February is forecasted at 0.2% versus 0.3% in month of January. Industrial production from United States due at 13.15 February, at least forecasted at 0.4% versus -0.1% in January. Capacity utilization rate February at the same time 79.4% forecast, 79.1 January's release, and the preliminary University of Michigan consumer sentiment for March is expected to show another improvement. That will be another positive signal in case of release at forecasted or above forecasted level in a series of data that came recently, and quite optimistic, showing that possible acceleration of U.S. recovery of the U.S. economy is quite likely in the near term. And that's all from the fundamentals and the news for today. I think more interesting will be the technical part that we are going to take a look now, see what we should expect in today's movements of major currencies and commodities. Euro-dollar's near-term price action shows some positive signals following bounce of a recent low at 129.10 with the break above the trend line resistance. This is the trend line drawn of 130.133 to 130.64. So far extended to 130.40. Seeing more potential towards the upside. As I said, the hourly studies are still positively aligned, and the current pullback could be still seen as a technical. The recent rally retraced nearly 61.8% of the initial 131.33 to 129.10 descent. Reached 130.40 ahead of 130.48, 61.8% retracement. Basically, what we need to see is the break above the previous double top, which is 130.64.67 highs, in order to confirm the near-term base at 129.10 and avert immediate downside risk in favor of some stronger corrective action. As we can see, the upside is still limited by now sideways moving 4-hour 55 days exponential moving average, as well as a 4-hour Ichimoku cloud base that is approximately at this zone. So overall, 130 zone offers quite strong resistance, and so far seen limiting the upside. As we can see at the beginning of European session, there is a small pullback. Higher base at 130 zone should ideally contain any reversal, as the price action is underpinned by bullish crossover of 20 over 55 days moving averages. Any break below these levels, we're talking about a zone of 130, 129.90, would delay immediate bulls, and would risk again a lower top, as the brief break above trendline resistance has not been verified yet. We still can see it as a false break in case of a break below 129.90, 129.80 supports that may keep the overall negative tone in play. Currently, the hourly structure is still holding positive, though we have initial signal of RSI reversing lower and already below its midline, while momentum and MACD are still holding a positive tone. On the 4-hour, lack of momentum at this point is seen as the momentum 22 days momentum is again back below its 100 line, while MACD is still holding below the center line. Overall, a break above, clear break above this area, and the regain of 130.64.67 would be a positive signal for some more significant recovery. Again, the key barriers of the near term are at 131.33 and 131.60, above which we'll be talking about possible stronger recovery, and confirming the base at 129.10. As set, downside break of 130, 129.90 would risk again a return down towards interim supports 129.50 zone, and then 129.10. That would signal an extension of the larger bear trend that is still fully in play, and look for test of our next targets 128.75, 50% Fibonacci retracement of 120.42 to 137.10 ascend, and the 200 days moving average currently standing at 128.61. As said, British dollar is the top performer, the sterling is top performer of past couple of sessions. We can see the strong acceleration seen yesterday after finding ground and building a higher base at approximately 149.10 zone. A fresh surge higher that also cleared the previous barriers that are at 150.46 and 150.80. Also broke above psychological 151.00 resistance, and extended so far to 151.43. This is the fresh session high, keeping the positive tone in play. Current pullback could be seen as technical pullback, as overbought hourly conditions suggest RSI is already emerging out of overbought territory, and MACD starting to point lower, as well as momentum that is overstretched. Overall will signal some call for some corrective action of the strong rally from yesterday's higher base at 149 zone, where we have the higher base at 150.70 area, also marking a 23.6% retracement of the entire recovery from 149.10, reinforced by 20 days exponential moving average, then 150.20, which is 38.2% retracement, and finally break point is seen around 149.80, where we have the 50% retracement, and the previous high of 13th of March. Break below, I would say break below 150 as psychological support, and 149.80.90 would again revive bears and avert immediate upside, immediate scope for a upside test of key barriers that are at 152.20. So far, positive structure as shown on the 4-hour chart shows some more room towards the upside, but quite extended. The conditions warn that stronger corrective pullback will be quite likely in the near term. In case of further extension, we'll be looking for test of 152 psychological, and then 152.20 previous highs, a break of which is required to confirm completion of the bear leg and bear face from 152.20 to 148.30, and avert immediate downside risk in favor of some stronger recovery. Overall, bears are still in play, but currently there are initial signals of reversal, as we can see the double doji and hammer candle on the daily chart, and the fresh long white candle that followed. Basically, today's close will give us some more clues whether this is developing into a recovery pattern, a reversal pattern, or it's just a brief correction preceding a fresh extension, as the pair remains in the strong downtrend of 163.80, which is the high of 2nd of January 2013, and after retracing 61.8% of the larger 135.01, 170.41 rally, still aiming towards the downside targets at 148.00, 147.80, and then possible extension seen down towards 142.30, May 2010 low. Dollar yen, as said, is still holding a neutral tone, but being supported as just under 96.70 recent high. Yesterday's unsuccessful attempt higher that peaked at 96.58 where the upside rejection occurred, and the quick raise of the yesterday's rally from 95.67. Basically the price returned exactly to the same level. It keeps the near-term price action in rather sideways mode. As we can see, there is no trend on the hourly ADX as well as 4-hour, while daily structure still holds a strong bullish tone as shown on the daily ADX, and still keeps focus at immediate upside targets at 96.17, then 97.00, and then 97.70 seen as the next targets. On the hourly, a neutral tone sees a fresh direction to be established on a break below range floor that is approximately at 95.65 and the spike lower at 95.44. So basically if we go below 95.40, then more downside pressure will be seen, and conversely break above yesterday's spike high at 96.58 will open immediate target at 96.70, and the signal end of this rather consolidative action and the resumption of the larger uptrend towards 97.00 and 97.70, our next upside targets. Aussie dollar remains well supported for now. Currently is in the consolidative mode, with the downside being protected so far at approximately 103.60. Yesterday's acceleration above the previous highs at 103.30 zone reached initially 103.81, and then close to the end of the day 104.00 psychological level has been touched, with the current consolidation still holding the positive tone, though the hourly structure is showing now loss of steam as indicators start to point lower, suggesting that some more significant corrective action might precede the fresh rally. Overall, still we're positive on the 4-hour chart, though a bit extended the conditions on the 4-hour, also calling for some corrective action before the bulls reassert. 103.63 is the initial support. Then we have 103.47, which is 55 days exponential moving average, along with the yesterday's intraday low at 103.39, along also with the previous highs at 103.34. Basically, this is seen as a near-term break point, and break below this previous range ceiling could trigger some more significant pullback that may look for test of another significant one, 50% retracement of the entire recovery from rally from 102 to 104, currently at 103.00, and the higher lows at 102.80, also close to 61.8% retracement. This will be seen on a break below 103.35 zone and break point, and basically a break of these levels would delay immediate bulls and take some deeper reversal that will prevent the pair of extending higher above 104. On the upside, we have quite a strong resistance at 104 zone. This is the psychological barrier. We have the 90 days moving average and 61.8% Fibonacci retracement of the entire 105.97, 101.14 descent. However, 200 days moving average currently at 103.55 is underpinning the action, and basically what will be seen as a positive factor in the current rally will be close to today's weekly close above 200 days moving average. That will give additional boost and the open way for extension higher. Clear break above 104 is to open 104.56 5th of February high, and 104.74 it's 30th of January high, along with the 76.4% retracement. These are the next targets seen on a break above 104, clear break above 104.00. So to recap the all the comments, 103.30 40 zone is seen as a break point, and if we lose this level, then likely deeper pullback will be the likely scenario. And conversely, break above 104 is to open 104 56, 104 74, and a significant close above 200 days moving average to keep the immediate bullish structure alive. Gold is ticking higher following yesterday's dip down to 1576. That basically weakened the structure following a pullback from 1600 double top where the gains stalled and ran out of steam, unable to clear the psychological level. However, quick recovery that erased all losses and moved even higher. Again, shifts focus towards the upside as hourly and 4-hour indicators now holding in the positive territory, and seeing again perspective for a possible retest of 1600. That will open the next significant barrier at 1620, which is the high of 26th of February, as well as 50% of 1684, 1554 descent. As shown on the 4-hour chart, the price is holding above all both we have to about both moving averages 20 and 55 with the bullish crossover of 20 over 55 seeing underpinning current action. Upside we have the Bollinger Band at 1596, and then we come to the 1600 double top break, of which is set to open also 1603 is the 38.2% retracement, and the break of which to open our next significant target and quite stronger resistance at 1620. Immediate support lies at 1590, and then 1587, which is the low of today of yesterday's intraday low. While any dip below yesterday's spike low at 1576 would revive bears again, as this marks nearly 61.8% retracement of the near-term recovery rally from 1561 to 1600. So far, positive structure on the near-term studies keeps the upside favored for now, as long as we are holding above 1583, approximately 1584. That will keep the upside in the near-term upside in the focus. And finally, the crude oil remains still holds a positive tone, as we can see that near-term studies are well positioned for possible further extension, but congestion under the recent high at 93.44 persists here as the third attempt higher again stalled. This was seen overnight. There is a risk again seen on the triple top in case we lose the trendline support, which is currently at 92.62, and basically confirmation will come on the break below 92 base and the double bottom that will sideline immediate bulls and open way for a stronger corrective action of the recovery rally from 89.55 to 93.44 so far. Conversely, holding above the trendline support may see again a fresh attempt higher. As I said, near-term studies are positively aligned and still see potential for a further extension higher. Break above 93.44, which is quite a strong resistance. The latest bear phase that commenced from these levels in end of February 2013 is now completed, but the pair is currently still lacking strength. The price is lacking strength for extension higher, and the clearance of the next significant barrier at 94 psychological resistance, and the 50% of entire 98.63 to 89.35 descend. Basically, what's the focus at this point is the congestion levels at approximately 93.40 on the upside. On the downside, 92.56, which is trendline support, and the 92.00 higher base that is also been contained by 200 days, by 55 days moving average. And the break of either side is to define the near-term direction. As said, near-term studies are still positively aligned and keep focus on the upside. Clearance of 93.40 barrier is set to open the next significant 94.00 50% retracement, and the high of 25th of February at 94.44. And that's all for today from me for Friday 15th of March 2013. Do we have any questions, comments? Please, you can send them now. It seems that there is no questions for today. In that case, I would like to thank you all. We are back on Monday. Our regular session starts at the same time, 8 o'clock GMT. It's a Friday, so we can expect some increased action in the markets, as most of investors will like to clear their positions at the end of the weekend. Still a whole day ahead of us, and we might see some action. Not very busy calendar, but still quite important releases. So keep an eye on the markets if you are in the positions. And do we have a question? Or it's just greetings? Greetings to you too, and welcome to the session. I can see that this is the new name that appeared. I hope we're going to see you again. You are selling gold, and what is your stop loss? We are generally not giving the trading advice. This you can find in the Windsor Brokers website. This is what I spoke yesterday. I can just give you brief levels to watch. Let me just show you the chart. Look, we are in the sideways mode, as I said, and the break of either side of the current range would give us fresh direction, as we have the range tops at approximately 1600. So this is seen as a quite logical point to put stops around this level. Most of investors are looking for this round figure levels to park their stops. Usually if it's a stop on the short position, then it's slightly above this level, or a stop below, stop on the longs slightly below. But bear in your mind that number of stops have already been here, as we have quite strong resistance at 1600 double top and psychological resistance. But I see it as quite a logical level in order to minimize your losses. I wouldn't see the real the idea of lifting it much higher in case of break, as clearance of 1600 would again trigger some stronger action. Few ticks up or down is quite good. Any other question? No more? Okay, we are going to conclude this session, as Arabic version is commencing in a few minutes. I wish you a nice Friday, of course, a nice and relaxing weekend, and expect to see you all on Monday on our regular session at 8 o'clock GMT, 10 o'clock local Cyprus time. Wish you a nice day, and as well as good and profitable trading. Good luck.